GETCRACK. Wake up, motherfucker.
How much are you seeing this more as a trade from interest rate differentials, growth differentials, and less relevant when it comes to some of the tariff trades? And I'm thinking in particular of the UN and more significantly, the Mexican peso.
Yeah, I think you have to unpack that it's pretty much a lot of the major things that drive FX. It's equity performance, it's growth outperformance, it's rate differentials, it's the risk premium that comes through on the trade uncertainty. So if you look at kind of your WCRS screen on Bloomberg, what you're going to see, this is a broad dollar move. So if we think about it, this is U.S. exceptionalism. So the key tenets of this is basically emerging market currencies are going to underperform, largely because with U.S. exceptionalism, you have outperformance of U.S. equities, you have a steeper curve. The number one thing the market's going to talk about now is the higher terminal rate in the U.S., where that lands, how the markets have to reprice the Fed, whether the Fed is going to be on pause now starting in December. All those things are going to be very bearish for pretty much every emerging market currency. Asia's more focused a little bit maybe on rate differentials. But if you go, again, back to Latin America, if you think about the Mexican peso, this is the worst case scenario. You have trade uncertainty. You have a USMCA sunset clause that comes through in 2026. You have an underperformance of the carry trade. And now you actually have the uncertainty of whether or not Trump wants to strike a deal with China and find a way to cut Mexico out of the supply chain, or if he wants to find a way to basically say to Mexico, we're going to renegotiate the trade standards here that we have in USMCA, which puts them down a rung anyway. So those are all key concerns. I'd say with the euro, again, we have uncertainty around the German government, which is likely to collapse at some point in the near term. And we're looking at potential elections in Germany. So there's political uncertainty in Europe, and there's pretty much, growth revival that's coming through in the U.S.
Right now, it's not really volatility. It's just straight and up to the right. I'm just wondering how much we end up with, if there is a wobble in equity markets, that will be that much more damaging to the dollar because it does undermine what you're talking about. How much do you take notice if there is a sell-off?
Well, I do think that you have to work through the first and second order effects. So as a lot of people have mentioned, we've underscored as well, all these policies, especially if there's a red wave, if they have the House as well, this is going to be inflationary. The first order effect is this is kind of very bullish again for the equity market. This is a repricing the Fed. This is a steeper curve. This is a bit of a reflation trade with the theme around U.S. exceptionalism. The second order effect is, again, and we see this in Japan, we saw this in the UK budget, we are seeing this all over the world. We are continuing to see a coordination of easier monetary policy and easier fiscal policy, but yet pretty much every country around the world has inflation above target. So central banks are dealing with something that's very challenging. You can't ease financial conditions and boost fiscal policy at the same time when inflation's already above target. So I think the second order effect here is, yes, that is a huge concern. The bond market is going to have a significant impact on whether or not the equity market can trade as exceptional as many are going to expect and extrapolate it to. That is, again, not the first order effect. That is, again, maybe a story that comes through in the second half of 2025. But that is something that we're going to be focused on a lot, given that, again, you can't get as much growth as you want. You can't deliver as unprecedented fiscal stimulus and not have to worry.
Crypto this morning. We have already a few times here with us now, getting after it relentlessly, right? Anthony Pompliano, founder and CEO of Professional Capital Management. And you're always in a positive mood. Even though crypto is not always positive, it is this morning. You expect more new highs on Bitcoin.
I mean, new all-time high. Satoshi couldn't have written a better script, having it hit a new all-time high on the night of the election. And I think one of the most important things is we have the first Bitcoin president. President Trump ran on a campaign point that he was going to protect Bitcoin. He was going to create a Bitcoin strategic reserve. And I think that you saw Bitcoin's price kind of reflect having somebody who was so pro-Bitcoin win the White House.
So relatively, it's not that recent, I guess. But so you think this is the real Donald Trump on Bitcoin that he's been for the last, how long, a year and a half?
I think that he's surrounded by enough people who really understand this. You know, people like Bitcoin Magazine CEO David Bailey, many others who have really spent the time with him. And one of the interesting things is whether he believes in Bitcoin or not is almost a moot point. Is what is he going to do? And if he's going to protect it and not be abrasive, that's a win. But if he also creates the Bitcoin Strategic Reserve, I think that'll be a huge tailwind, and it'll kick off this global game theory, right? If the United States starts to lean in and welcome Bitcoin and say, hey, this is an asset that we want on our balance sheet, other countries are going to have to respond. And the interesting thing about Bitcoin is that it's been a bottoms-up adoption story. Individuals adopted it first. Now we see corporations and financial institutions. But the central banks are some of the biggest buyers of gold. Gold is up huge. And so if central banks start to buy Bitcoin and put it in their reserves, that would be a massive tailwind for Bitcoin.
So even short of a sovereign wealth fund or anything like that, Andrew, Becky, we haven't talked about Gary Gensler in light of what's going on.
You mean that he's not going to have a job?
You tell me.
Of course he's not going to have a job. What do we need to talk about here?
We know who's not going to be SEC commissioner.
I can tell you who's not going to be the SEC commissioner. I can tell you who's not going to run the FTC. I can tell you who's not going, right? I can go through the list.
Yeah.
It's going to be a house cleaning, obviously.
Mark Cuban is not going to be if he wanted to be at this point. You think Gensler's gone, and you think that would be good?
I think people expect whenever a new president comes in, they're going to, kind of play musical chairs with all the regulatory organizations. What I do think we are on the precipice of is a kind of an economic explosion. Right, we have somebody who's coming in who obviously is very business friendly. He's surrounded by people who are very business friendly. They have some radical ideas in a positive way in terms of what they can do to cut taxes, drive GDP growth, use the country's balance sheet to try to close the deficit gap. And so I don't expect them to be able to do everything that they're saying that they can do. Right, when you're on the campaign trail, you say a lot of stuff. But if they can accomplish 50% of it,
so which
it'd be pretty
50%?
powerful.
Like, which are the ones that you think are most important and maybe most likely to get put through?
Well, I think actually, if you look at what the American people did last night, they basically issued a mandate. They said, we want lower inflation, we want affordable housing, we want a secure border, we want a government that doesn't go and engage in more war, and we want to feel like we are safe, secure, and strong at home. And so if you are the president coming in and you can say, how do I get inflation down and under control? If you look at home affordability, start to deregulate and allow people to build more housing in this country.
Right, because the problem is not giving people $25,000 to say you can go ahead and buy a house. The problem is creating more supply.
For a minute, I thought you were pitching the inflation trade. You're talking out of both sides of your mouth. All these things that he's going to do with tariffs and cutting taxes and not
all
taxing
good for
kids.
Bitcoin.
Yeah, all good for Bitcoin because of inflation. Then you just said he's going to bring inflation down. I don't know who I believe. I don't know which part of you I believe.
I think there's a difference between skyrocketing inflation and currency debasement, right? And the currency debasement is why Bitcoin goes up. Inflation is usually happens alongside
of it, isn't
it? It's not in the sense that you can have the currency continue to debase and lose purchasing power without having that inflation number spike to 9%. Right, and I think that's what we really saw here was we saw inflation spike over 9% during the Biden administration.
So what do you think it should be? 5%, 6%, 7%?
I tend to think that the inflation rate is not 2%, it's higher than that, but it's not going to be 5 to 10%.
Do you think the Fed goes along with that? If they start to see inflation picking back up, wouldn't the Fed then raise rates, and wouldn't that have curb inflationary economic expansion?
One of the biggest questions I think that we're going to face as a country is how involved should the president and the executive branch be involved in monetary policy. Donald Trump has said that he thinks the president should be more involved. We obviously have had a situation where the central bank has been independent.
You think inflationary stuff and then saying we're going to keep rates going down, 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 interest rates going down, down, down is the right policy?
I don't think that you can keep rates going down if inflation is spiking. And so I think that's where you get a lot of complexity. And it's not as clear in terms of when inflation is spiking, what do you do to get it down?
And by the way, the bond market isn't paying attention to the Fed lowering rates at this point anyway, not on the long end, not even on the short end at this point. But the 10-year is all the way back up at 447. So there's only so much that any administration or any Federal Reserve can do.
Yeah, one of the things that's really interesting about policy is you kind of draw, the perfect playbook, right? You're like, hey, this is the theory of what could happen. But then that plan meets the real world. And so you can try to do all these things.
Like Mike Tyson, right? You can do all these things till somebody punches you in the face.
Yeah.
What if that person punching you in the face is the bond market?
And it's also a very complex system. So you say, hey, I'm going to go get home affordability down. Okay. Or you go and you do that. As soon as you do that, all of a sudden inflation spikes somewhere else. You got to go and you try to address that. Then asset prices crash, right? And so you're just constantly
incentivizing people to build more housing supply. That seems like the right way to go at it.
And one of the questions I think with housing supply is how much is the president and the national government able to do that versus is it local governments? One of the things that I say is for your investment portfolio, the Federal Reserve chairman is more important than the president. But for many Americans, actually, who's on their local city council may be more important than who's in the White House.
Yo, what's up? What's up? Good morning. So, two videos there talking about currency, talking about FX with the Mexican peso. You had bonds, you had Bitcoin, everything. Yes, that's what only thing I was worried about, the quick end, you know? Or are we going to get a quick end? Because right away after East Coast polls closed and Central Time closed, the market was already pushing ahead towards a Trump victory. Big money already has algorithms looking at exit polls and poll results. They already saw that Trump was winning and they were just anticipating the whole night. So I went to sleep. I mean, I didn't go on stream to the election stream because I was like, the only way at this point it would flip is if Pennsylvania or whatever did some BS and they were still counting votes, trying to gin it up. That would be my worry. So I just was like, man, I'm not going to stay up just in case that would happen. I'm going to sleep. Because like I said in the last video, and I played that video where the dude was saying by China lunchtime, so 9 p.m. my time, if the algos already decided, then that's it. That's basically who was going to win. If the trading algos were wrong, man, because you got hedge funds here betting tons of money. They cannot afford to be wrong, right? Like they have, like me, I'll just be gambling. I don't have any of this extra secret sauce where I could just like look at all the polling of different states and then determine what Pennsylvania is going to do like they can. But based on the trends that they got, they decided right away within an hour. And it's just like everybody on CNN and whatever, they can talk whatever they want, but the big money guys already knew who was going to win. So unless there was some weird flip like we had in 2020, it was a done deal. It was a done deal, man. And this is going to be pretty interesting because once they count up all the votes and they realize, wait a minute, how can Biden have won 2020 with all those extra votes? Where did those votes come from? The only explanation if this was COVID was that people just voted on the presidential ticket and just did not vote anything else. Like, because they all got mail-in ballots, they just decided like they hated Trump so much that they just voted against him. And that was a single issue vote for them because getting him out of office was more important to them at that time that they just did it. Maybe I might believe that, but this is going to be very interesting because the markets tell you. This is why I always say, read the charts. Don't look at the news. The charts tell you what's going to happen. So yesterday, False came on here, right? He asked me who you think is going to win. Markets say Trump was going to win. That was like, if you wanted my honest answer, if you wanted me to interpret the market for you, that's what it was. And if the GOP wins the House, this is a much harder contestation than, because right now the market is moving towards them winning some kind of slight majority, perhaps. I don't know if they can, but let's say if they can, then yes. Yes, because a lot of people didn't trust Polymarket, Momo, for the reason that it's owned by Peter Thiel. I already talked about that several streams ago, probably over a week ago. So yeah. But the main thing is you just look at the bond market. The bond market is the biggest market, right? That leads everything else. If the bond market didn't tell you that, then what could you say? And it didn't shift at all when all the polls started closing, because once you got those exit polls and things like that, it's like the algorithms would already know. That's it. Where did yeah, see? I mean, I like that's the only thing I could think of. Like people that never voted in their lives that are not going to vote ever again. They just hated Trump so much at that time and I could believe it in a way, right? Because they pinned everything on Trump. Like COVID deaths were on Trump. Even like they were saying the lockdowns was because of Trump, like because like he couldn't come up with a vaccine fast enough or some shit. Like that was the most insane thing, right, in the world, where you could talk all this stuff and blame a president for every little decision, which, you know, a lot of it was done by local government. right? So a lot of those deaths were done in, and I don't want to get into politics, right? I hate politics. It's bullshit. It's theater to me. That's why I do not like just to go and talk about that stuff, people, because I'm just like, read the chart, read the damn chart, and make some damn money off of politics if you're going to talk about politics. This is what my show is primarily geared towards. And if you listen to me yesterday, I gave you some subtle hints about what to buy, right? I talked about EWW, Mexican stocks. Well, let's see how they're doing. So, like, if you were a gambler, I mean, I think the problem right now is that if I'm going to give gambles, I have to tell you what the risk reward is, right? Not all of them are going to work. Like, these are real gambles based on an event. I hate earnings. I hate elections day because everything can flip and flop the day after, the day before. And then once that's done, then the market will renormalize back to where it was. So if you just want a quick trade, yeah, these are the best days for you. And we got Powell coming tomorrow. So that's another thing to watch. So that'll be interesting. So we heard about the dollar, right? And the peso. So I mentioned EWW, Mexican ETFs. You see that? Perfect. It almost hit that bottom of the range at 48. It bounced back up. Now we're back to where we were yesterday, pretty much. So within an hour, you probably could have made a flip right there. If you use 3X ETF Mexico, MEXX, Mexico 3X, Dirección Daily, MSCI Mexico Bull 3X shares. Okay, you bought ticker symbol MEXX. If you did that trade, that's about quick 15%. Not bad, right? And if you did options on EU, I don't know how the options market looks for EU, but yeah, if you were a crazy ass gambler yesterday, you probably would have been like, oh, I'll buy some calls or something and make a flip on that overnight. So like I said, that's it, man. That's it. That was a quick trade just based on an overreaction on the GOP winning, crashing the peso, and then the peso rebounding. That was it. Now, let's look at something else that I was mentioning. Oh, solar stocks. Right, solar stocks. So, like I said, solar stocks are very volatile. They go up and down the same way as quickly as they can. So, now it's time to eye them. Obviously, if they win the House, ooh, really bad for solar stocks. But it could be opportunity for trade because now we see them right back to where they were. They gave up all their gains here because solar stocks are affected by interest rates, but they're also affected by policy. Okay, so they're affected by two things, right? Government policy, government action, and interest rates. Interest rates now are moving up, right? So that's a problem, and policy is moving up. However, like we said, looking back at those videos, even though the bond market is rising, the rates are rising, the bond market is falling, stocks are still going up. For what reason? Because we're getting fiscal stimulus. But because the Democrats are not holding the purse, it's the Republicans, then the stimulus isn't going everywhere. So this is multi-dimensional. So usually you would think like, oh, small cap stock, small cap growth, you have rising interest rates, not good, right? But because it's easy to spend when a House and president are working together, they're going to ignore that for now. So this is going to be a different situation than what we had in 2022. So the Fed will keep rates longer. So I'll show a probability graph of that. So let's look at what stocks are the hot babies right now. As you heard, Bitcoin is a hot area, right? So if you bought some miners back here, this will be good. Now, it's not too late to get in because we're still in early stages. Bitcoin just cracked above 75,000 overnight. It's not ready yet. It's not ready to launch yet. We got Powell tomorrow. Let's see. So I bought some here. I traded it. Mara from 13, 14, sold from 19, whatever. Okay, I waited it for it to dip back. I wanted to see how it did after election. Now it's come back. It's recovered. So not too late. Okay, not too late for it. So we're going to look at all these towards the end of the stream. I'll look at all these charts separately because we have tons of Bitcoin tickers. You can see them. The higher they go, like this one, CIFR, the riskier they are. Oh, Coinbase is doing 21. Not bad, not bad. That's a good sign. Very good sign. MSTR, the large cap favorite, which just basically is track crypto. Like, we just want something more juicy, right? So when the market is ready, yeah, we can get more juicy about it. We're not there yet. Not there. We're just at the beginning. We're just at the cusp. Another one talked about hymns yesterday. Okay, hymns. See, hymns was pretty good. We had Novo Nordisk report. So Bitcoin's pulling back a bit. Yeah. Okay, Novo Nordisk reported nothing much. But like I said, we'll watch what hymns does. So they're doing the generic version, right, of all these drugs of Novo Nordisk. So it hit the top of that resistance, 24, is pulling back. Now, if you came in here at 18, that would have been the good trade. But this is risky because before earnings. So if you didn't get 18, I probably wouldn't have done it at all. I don't care. I'm not going to do an event-based trade because anything can happen. You can see it opened, crashed, went back up, and then ended kind of flat before elections. And it's more important because of Novo Nordisk. I mean, elections kind of adds more juice to the options market, I'm assuming. So a lot of these things are over-exaggerated moves. So once you get Novo Nordisk, elections, you get this pop, it'll pull back. So watch this. But if you bought here, it's the perfect trade. And the reason why is you just look at the chart. So now you guys, after all those October streams, you should understand how I look at this stuff. You see the rising 18, right? And 40. Rising 18, rising 40. They're going in parallel. You see it hit. Okay, it goes through the 18, not a good look. But at least it hits here to the 40, and that 40 coincides with an important level because this green bar right here, see this daily green bar, must have been some kind of event, some kind of news. I don't care what it is. I just know that this bar is important. And then this bar here, you have another high volume area, and this bar lands right there, closes right at that bar. So you know that this line is super critical. So when you see a lot of confluence, you see this moving, going up, you see the averages heading towards that line. You're like, this is a high probability trade that if I just buy here and think it's going to go up into earnings, elections, whatever, Novo Nordisk earnings to all these things. So that's I'm willing to take a shot. Then yeah, fine. I'll risk it there. Now we got to go to SMCI, right? Earnings yesterday, terrible. Not a surprise, but at least it didn't drop 50% like that other guy was saying. Like if it was as bad as it could be, it's still bad. So we got bad guidance, unknown guidance for the rest of the year. So we have nothing for the rest of the year. Nobody knows what's going to happen to this company for the rest of the year. Financial issues. It has to do its 10K filing. It's got a deadline in about a week. You got NVIDIA talking in earnings on the 20th of this month. So they could talk mad shit about SMCI. Who knows? Right? They could say oh, we're cutting you guys off. We're going to move to other companies. They already are. There's already rumors that they're shifting orders out. So this has as much bad news as it could get. This is only if you're a real gambler. All right. So I already bought some here at 28 because it got close to 25. Bought more at 24. And I bought again at 20. So that's pretty much my orders. All of it filled up. So here's something I'll tell you. If you buy something, I'll do the daily chart here. So you look at this. This is the ATR, all right? If you remember, average true range. So you know this is quite risky. The average true range is about $4, okay? So let's say 2 times 4. So 2 times the ATR, let's say $8. So on average, this thing can move up and down $8 in a day, no problem. That's the risk. So if I bought at 28, I have to be aware that I could go to 20, which it did. So this is how you have to think about trades. You're taking a risk. like $8 out of 28 is not something to laugh at, right? You are if you're gonna drop money, you have to understand, like, okay, I'm willing to lose about 30%, right? That's essentially what it is, right? That's 30% about. So, okay, let's say I drop $1,000. I'm willing to lose 30% of that. That's fine. But if it goes up, I'm cool, right? Fine. I liked it. So what you have to do is you have to plan to scale in, because you know that it's this chart. If you look at this chart, you know that this is a bottom of this important range here set in 2023. I'm willing to buy as much as I can here, but I'm open to the fact that it can drop here to the last level, because if there's any real bad news, yes, it will drop 50%, because the next stop is here. This is before all that AI hype pushed this stock up right here at this level. This is probably where I bought it, near this zone, right? When I first bought it originally, I bought it here. I sold too early. I probably sold it around when the AI hype just started kicking in. I was really surprised how stupid people were to buy this company all the way up. And this is before the split. So the split was like 10-1. This was $1,000 stock when it got added to the S&P 500. Yes, this is insanity, right? You guys are really going crazy, overinflating the market cap of this stock. So it shouldn't be a surprise. You saw this structure. I showed you the Wyckoff diagram. Goes up, you make this distribution. So whoever was playing around here, selling the stock, keeping the price below 90 and 100 here, they already knew bad news was coming. So by the time the short seller said, like, hey, we see accounting problems and we're shorting the stock, they probably already did it here, right here. And then by the time they told everybody else about it to crash it further, they probably started covering. They probably said, like, we're covering, we're going to start covering. And then by the time it hits here, they're all out. They covered the rest of their positions. So by the time a short seller by the time any news happens, it's too late. You got in at the wrong time. If you were shorting, good on you, but you're shorting at a point where it was too late. You probably were started shorting here and got covered out, right? You got blown out right here. You had to cover because you were under intense pressure every time this stock kept pushing back up. And perhaps if you didn't position well enough, you might have missed this final move here. This could be the final move. Don't know. This company could be absolutely unsalvageable. But let's say it's not. Let's say it has some hope left. Then yeah, I would start buying right there for a gamble into NVIDIA's earnings. So that's how you should plan things. Nothing is going to be like, I can find the bottom, I can find the top. I'm sorry. That anybody who tells you they can find exact tops and bottoms is like ridiculous. But at least we can gamble it out. You can find your odds and say, hey, this is where I would bet. At least this is a better bet to buy here than some fool buying up here at $40. They basically lost 50% already. Any fool that was buying these dips right here, with the way that chart looked, no way. I don't care. The odds are not in my favor. Why would I do that? Here, the odds are even worse because the chart is disgusting. But at least here, I know that I'm at the last point of supply, because this was when people were buying before the AI hype. There was some rumors of a hype, right? But it wasn't fully kicking in yet. This is when really things shot off up here. So we'll see. We'll see if it works. Don't know. So risk what you can to lose. Okay. Yeah, all my shit is up barring FXI. Yeah, so Claire, I have closed my short there. I was hoping Yang could pop even higher, so Yang had a reverse split. Okay, so let's assume maybe around 90, I guess, in the split adjusted. So yeah, China's not good to be buying yet. Right here is better. You see, we have a rising on the daily. You have a rising 18. I mean, not rising 18, rising 40. You got an 18 about to kiss it. So here is where you should start looking at Chinese stocks. You got to wait a while because Trump is going to get ready to talk a lot of policy things. I'm sure he's going to go on people to interview. Maybe he'll get people in his cabinet that will decide how things move for China. China's doing its central committee meetings this week. So we got a lot of discussions going on, and it'll continue into December when they meet again. So they'll have to deal with Trump in their own fashion to try to gin up domestic demand. But yeah, I don't think you can really short Chinese stocks unless it's specific stocks. I think as a group, a lot of stocks are diverging from each other. Like I told you yesterday, AI cloud computing Chinese stock KC, they filed a 6K. So this is a foreign filing. Okay. So yeah, it's a 6K. I didn't read it, so I didn't have a chance to go read through it. But yeah, you can read it on your own. I'll put it in chat if you care about the fundamentals. So since you guys know I'm a chart person, I really don't care too much. Right there, you guys can go and chat and look it up. But yesterday, it popped on high volume for some strange reason before elections. That got me really curious. And I suppose now we know why it jumped 19% yesterday, because the 6K filing was coming today, and someone probably got an early look at it. I don't know. Maybe that's why. Yeah, somebody played games. But you can see here, look at this chart. You see it's rising 18 on the daily. You see it kiss. And then you get the pop. And you're like, well, I think this is ready to go. And it looks like it's going. Okay, so that's something to watch. Kingsoft Cloud Holdings, ticker symbol KC. And let's see what other Chinese stocks to look at. Oh, Yumsi had its earnings yesterday. Not bad. It's still holding. So it's not getting affected by the Trump stuff like the other Chinese stocks. Let's look at KWEB. KWEB is the tech NASDAQ concentrated ETF for China, KWEB, Crane Shares Trust. And there is a leverage version of that called CWEB. So this is the bullish version. So if you think everything will clear out soon for tech companies in China, then yeah, you can. And you don't have time to look at individual stocks, and you just want some leverage. It goes up 2 times KWEB, the CWEB, CWEB, Direxion Daily, CSI China Internet Index, Bull 2X shares. So yes, you can try to play that, see what happens, into next year. But be cautious now. We don't have earnings for a lot of Chinese stocks just yet. And JKS, the other one. So this is perfect. Oh, this looks perfect. Yeah, if you want to risk it for the biscuit, look at that. So this area here is pretty significant, right? You see that? So that's how you got to do things. You look at a chart real quickly. Just look at it. Find where the points are that it touches the most and significant areas. So this is significant, right? So you see it touch again here. So I would believe that once it got here, it broke out, and you see it was struggling here. It kind of undercut here and here, but for the most part, I think this is the top of a range. And look at it, it's almost back down there. So if you think China will pump their domestic consumption, and of course China will do a lot of solar energy type work because they're into green energy no matter what, then yes, this would be the way to go. And the other thing I taught you guys is you guys to zoom out, look at the weekly, look at the monthly charts. You see it's in a downtrend, but since this point here, when China announced a lot of stimulus, it's trying to form a bottom. So we're getting a bottom forming here on the weekly. Hopefully that's what it's trying to do. It's not just going to pull back and go into a new low. Let's say this point, this is a lot stronger than here and here, right? If you look here, so December 23rd or June 24th, when it tried to go up, failed. This is at least has a lot more volume, and it's trying to push its way back up twice now, September, and then again in 1 month later in October. So twice. That to me is trying to do something a lot different. So what you call that in Wyckoff terms is this is a change in character. This is a change in character. So if you're more patient about it and you think this is going to be a longer term trade into next year, where, okay, let's say Trump does a lot of tariffs on solar cells, blah, 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 it gets shaken out. But if you don't see it make a new low, like if it drops below this green line, right, that I drew, but it doesn't go below here, the lows of October, then I would probably consider just buying it. Just go for it. Because then Chinese stimulus will kick in. By that point, a lot of the stimulus will start kicking in, and then it'll ramp up. It'll just start flying. Yeah. It could be like this. Could be this situation. This is a very high beta stock. You can see how easy it is to push it up and down. So if you catch it at the right time to trade, boom, you're going from 25 to 70 in no time, right? So you could just do this, pop. It'll just start popping. That's it. Done. I don't know. I'm just saying that's the potential. I'm not saying it's a guarantee, but that's how you should look at all your trades. You look at how the stock moves on different time frames. Then you just expand it and say, hey, well, what's the risk reward I'm willing to take? This is very risky because it moves very quickly. But that means like I could get a quick scalp, right? If I catch it at the right moments, move in and out. So I know a lot of you guys like to trade, swing trade, day trade. This is the stock. And you can look at different time frames and decide what's the best moment to get in. Actually, that reminds me of GameStop. GameStop, ooh, it's trying. Okay, so this thing, you see here. So weekly, we're almost trying to kiss, right? If we're getting a lot of liquidity coming into the market right now, this bad boy, if there's a lot of shorts still trying to play with this thing, yeah, you get in at the right time. Yep, it's meme time, baby. It's meme time. Okay, and a lot of people already finished playing around with DJT, see? So Trump won. They're not going to use this as a toy anymore. So whoever was playing short and long on this stock, I think they're getting bored, right? It's over. The election's done. We got our last bit of money here. They were gambling last night into today. Quick 50% gain. Who knows what the options market was doing? Probably thousands of percent. People just gambling on it. They're done with it. Whatever profits came from this move, they're going to look for the next meme stock. They might go back to GameStop. And AMC is reporting after the close. If I see a lot of significant volume in AMC tomorrow after the results, then I know that meme time is here. Meme time is ready. So get ready. Get ready. It's going to be 2021 all over again, at least for a couple months. All right. Okay, guys. So I was going to play a couple more videos, I think. Yeah, here we are. I think you guys can see this one.
Stocks are on the move this morning. Tesla shares are surging. In fact, they're up by more than 13% right now. You've also got Apple and Alphabet that are higher. Apple just barely. It's up by about 6 cents. Meta shares down by about 1.6% this morning. And joining us right now to talk through all of it is Gene Munster. He's Deepwater Asset Management managing partner. Gene, we've talked a lot about the tax policy proposals that we might be seeing in this new administration. We have not touched as much on the regulatory overhang and what that might look like for some of these tech stocks. I think people are assuming it will be a very different regulatory overhang, but at the same time, the tech stocks were targeted by the first Trump administration. So how do you play this out?
I think you put the three factors together here, Becky. It's first the tariffs, the taxes, that piece. That's probably a net mixed neutral. On the regulatory front, this is going to be positive for big tech. There's no question about it, is that smaller government means smaller regulatory influence. This is a direct positive impact today on Google. The probability that they get broken up just declined today. A direct positive impact on Apple. The probability that they can maintain that very lucrative $15 billion search agreement. with Google. It's about 20% of Apple's operating income, them keeping that increased. And the probability of big tech being able to acquire companies like Databricks, Anthropic, Perplexity, these companies 24 hours ago were really off the table. These are kind of cornerstone, anointed AI companies that would be coveted by some of the big tech. I think that probability just went up. So I think when you put the mix together, at least on the political side, this is a positive day, with the one outlier, of course, being Meta. Trump's comments back in March that Facebook is the enemy of the people. I think that basically reduces the probability that we're going to see some sort of a TikTok ban on. So I think that piece of regulation in TikTok, I think that declined dramatically today. But overall, Becky, I think that this is, on the regulatory side, it's most promising for big tech.
Hey, Gene, you had the FTC with Lina Khan almost working hand in hand with the EU with some of these big regulatory reaches. Apple has faced so much trouble with the EU in particular, just what we've heard this week about the new fine that could be coming from the EU or is expected to be coming from the EU. How does this change if the United States regulators aren't working along with the EU? Will they stand up for these companies? Will it change the European strategy?
I don't think it's going to have much impact on how Europe is approaching things. But again, the probability that something happens on the regulatory front in the U.S., let's just kind of look for one piece that has been the center of a bullseye, which is what Apple is doing on their App Store. The EU's required a lot of changes related to some of their policies around steering. Apple's won some important cases in the U.S., but there's still this lingering concern from investors about what happens with the take rate on the App Store. And I think that the EU historically has set precedent. I don't believe that is going to be the case, at least for the next 4 years. And so I think for investors, and just take that case of Apple, they can rest better tonight knowing that there's probably not going to be that pressure coming from the EU. Again, I think that this is just a marked step forward. And why it's so important, why this timing is so important, is because AI, I think, we're still early in the phases. Ultimately, I believe this is going to be more impactful than what the internet is. And I think having less of a regulatory environment is going to be most advantageous to these companies.
Can we talk Tesla very quickly? That stock up 13%, and we've posited a lot about why that may be. Obviously, Elon Musk, very close to this administration, could even be playing a major role in this administration. What does it mean for Tesla shares? Obviously, better regulatory overlook, maybe less competition that's going to be coming in from China and other places, but Tesla also has probably roughly 40% of its sales coming from China, and that Trump administration with these tariffs may not be making many friends over in China.
I believe Tesla is up today because of emotion. And I think the emotion of Tesla investors, their leader, of course, is Elon. He just had a big bet that paid off. And then we quickly look to what's the next big bet and the probabilities. And the next big bet for Tesla is around autonomy. And he's been very clear that this is the future of the company. And forget about what's going to happen with EVs and tax credit. What matters when it comes to Trump and Elon Musk is Trump's ability to make it easier for Musk to advance what they're doing around autonomy, around their tech stack, to use less LiDAR, for example. That is going to be the regulatory piece around FSD autonomy is going to be more challenging than the technology piece. And that took a big step forward today. And what that means is the potential for the robotaxi fleet that could add 20% to Tesla's business in the next 5 to 7 years. That just
Gene, but if you look at Rivian, it's down. What's the thought there?
The Rivian doesn't have the autonomy story to it. And I think that when it comes, again, the tax credit piece, who knows what's going to happen with that. Trump's kind of adjusted his message more recently on that. But the reason why I think Rivian's down and Tesla is up is that Elon has showed that he can make a big bet and be successful. His next big bet's autonomy. And I think his relationship with Trump will change the relationship between Tesla and
Now to talk about the implications is David Rubenstein. He is co-founder and co-chairman of the Carlyle Group. And David, good morning.
Good morning. Thank you for having me.
Let's talk about what this means for the markets. You have seen the equity markets kind of off and running, a gain of maybe 2.75% for the Dow futures right now. We've also seen Treasury yields higher as well, somewhere between 12 and 14 basis points on the 10-year. What do you think this means for the stock markets, first of all?
Clearly, the stock market today will be up very strongly. I think many people in the financial markets were pushing for and wanted a Trump victory, and they got that. But also what you got out of the election appears to be a very strong, united government in the sense that the president is likely to have the House and the Senate, not just a majority, but many people in the House and Senate will feel they got elected because of him. And not since 1964, when Lyndon Johnson won overwhelmingly and he had big majorities in the House and the Senate, many of which those seats came about because of Johnson's strong coattails. Did you have a president with this kind of power? So Donald Trump has the power as president to get a lot done through Congress, and I think members of Congress will go along a lot with what he wants. Even when President Obama had majority of the House and the Senate initially, he didn't have quite the coattail effects that I think Donald Trump has had in this election. So I think you're going to see a united government. I think the country seems to want a united government. I think you're also likely to see the markets go up for a while, for sure.
So if he has a lot of sway over those senators and especially House Republicans, what do you think he will go after first? Because even if you have that kind of sway, you can't do everything at once. How do you think he will prioritize, and what do you think the major initiatives are going to be?
Well, initially, he said that he will do tariffs, and I suspect that that doesn't require Congress to be involved. I think his main legislative initiative, though I obviously can't speak for him, would probably be things in the tax area. His tax cuts from 5 years ago are expiring, and so if he wants to have them extended or enhanced, he'll have to get that done relatively quickly. I suspect if he controls the House Ways and Means Committee and the Senate Finance Committee, it looks like he will, he shouldn't have as much difficulty getting that done. You'll have to deal with the deficit issues, but I think the markets don't really care about deficits. That's what we learned. So as long as the markets don't care about deficits, and they don't appear to be, I think he can get through his tax legislation.
You might argue that the Treasury market cares a little bit. And look, we had Gary Cohn saying as recently as last night that he doesn't think that this is necessarily concerned about deficits. You're just seeing the Treasury markets normalize and having higher yields on the back end of the curve. Do you think that's the case?
Well, I think the theory will be that, yes, we'll have some deficits for a while, but if economic growth can get to the level we want, that's the best way to solve deficits. There's no way we're going to solve deficits by cutting spending. We just can't cut the key parts of the government that really are 90% of the spending, which are entitlements, defense, and interest. The only way you can really get more revenue in is greater economic growth, and I think the markets will assume that that will come about. If you didn't ask me, but if I were to say who are the big loser in this election, it's probably the pollsters. The pollsters, I think, were not that accurate, and it may be artificial intelligence could be brought to the polling community because they seem to have not really predicted exactly what was happening. And it now is clear that there was a gigantic wave in favor of President Trump.
David, to your point about growth and to your point about dealing with deficits, there's a fascinating piece. I don't know if you had an opportunity to see it. Larry Fink of BlackRock writing, quote, "We need to increase the size of our economy so that what we owe becomes smaller relative to what we make. If GDP rate rises at an average of 3% in real terms over the next 5 years, the country's debt to GDP ratio would stay roughly stable at a high but reasonable level." Do you believe that we can get and stay at a 3% or above rate, given all of the sort of cross currents that we're just talking about?
Nobody knows for certain, but I would say that if you can get 3% or 3.5% growth, it will solve a lot of problems. Right now, the budget is basically 90% interest, entitlements, defense spending, and there's no room to really cut there. And as a result, you're only going to get through this with growth. There's no other way that I can see.
Okay, let's talk maybe immigration. I would think that would be high on his list of things to get past too. Taxes, I understand, tariffs, and immigration. You think those are the first three?
Immigration is an issue that the president can do a fair bit on his own. I don't know whether the president will go, I can't speak for him, but whether he'll try to get legislation through Congress. Clearly, it's very complicated to get that legislation through. But the legislation that was negotiated earlier this year that didn't pass the Congress if he were to support something like that, I suspect it would get through. In the early days of his administration, the first 100 days, he should be able to get a large part of what he wants to get done, just as Roosevelt did. Now, the 100 days is an artificial measurement, but I think if in the first couple months, if President Trump can get united behind a couple ideas, I think he can get those through Congress, because I think Congress is largely going to go along with what he wants, because it's clear that he had coattail effects throughout the nation in ways that the pollsters did not see.
It's hard to imagine too many Republicans standing up to him and saying, no, we're not going to do what you want to do.
I agree with you. 4 years ago, you invited me on exactly this day, 4 years ago, and I said then that I thought President Trump would run again. And if you go back and look at the tape, I think you were all skeptical. I didn't anticipate he would exactly do what he did, but I did think that he really wanted to prove that he had won the last time, and I think he deserves some credit for going through very difficult circumstances. He overcame a lot of financial problems, he overcame a lot of legal problems, and I would not have anticipated he'd been able to do this, but I did think he wanted to run. I should say, finally, that President Biden deserves some credit for what he has done as well. He spent 50 years in public service, didn't do many things that he could have done on the private sector, but he really dedicated his life to public service. And I think a lot of things that he did will benefit the country and President Trump. I think the CHIPS Act, for example, the Infrastructure Act will have benefits we'll see for many, many years. So while President Biden will be leaving the political scene, I don't think we should just say that he didn't accomplish a fair bit in 4 years, even though he didn't control Congress completely the way that President Trump does.
See that? Thank you, Mr. Rubenstein. 2 wings on the same bird, 2 legs on the same person, right? Everything happens for a reason, guys. Everything happens for a reason. And like you said, he already knew Trump was going to run. Anybody that has a lot of money has all kinds of algorithms already in place to predict people. You are not hard to predict as a human being. And if you're a mass of humans, even easier to predict. AI can definitely predict you. And now they can control you too, because AI can make fake ads and fake bots and write scripts. You don't even need writers anymore to get this going. WWE doesn't need any writers. We got AI writers, right? So like I said, follow the charts. The charts tell all. That's all you need to do. And once you do that, once you understand how the game is played, life is really easy. Don't get controlled. Take control of yourself. Watch what's going on behind the veil, and you'll get where you need to be. Okay. So let's look at some charts. XBI, pretty nice. I like this. The way it's moving, you see, perfect. It's building energy since February 24th when it got back here to this level. Now, if we're really going to get into bubble land, right? You see here? You see that? That cyan? This was before COVID. And then once the Fed started their money printing, we broke out of that cyan line by May. And then once we retouched it into the summer and then got close to it before the 2020 election, that was really, really when things went wild. We're almost at that point now. Fed day is tomorrow. See what Jerome Powell says. If he says the nice, right things, we're ready to go. Revisit our old highs. That's 70% from here in XBI. And guess what? That's just the ETF. So little companies like Hims, these healthcare companies, watch them. Watch what they do. We're back at this old high from January 2021. People are looking for things to do with their money. They are looking for new opportunities. I know a lot of people have kept their money on the sidelines, sticking with T-bills that pay 5%, sticking with CDs that pay 5%. We are entering a new era when the rates are dropping. But, under Trump, they're not going to drop that much into next year. They're probably just going to be a tad below 4%, I think, for long-term rates. So, I mean, not long-term rates. I mean, the Fed funds rate. So I would say maybe CDs might still look attractive to most risk-averse people, but when you go on the news and you keep seeing like, oh, this stock made a new high, this stock made a new high, people's greed starts kicking in. That's what I'm expecting. Once greed takes over, that's when the bubble really starts pumping. So we haven't even hit here yet. So just look at this stock, which is a great outperformer. And I've done the comparison, right? Blah, blah, blah. Let's see. XBI. Let's see. I think I gotta do it this way. If I do comparison, do a new price scale. Okay, you see this? See, you see that? HIMSS follows the rest of its peers, its sector, and then it starts leaving it around April, right? Once it got its Ozempic type move, now it's diverging. And once XBI moves up, you know, the tide, you can think of it as a tide on the ocean. It lifts all the boats, big or small. Small boats, definitely, you know, can get lift a lot higher. So because we got the XBI here, it's part of a riskier group of stocks, it will go up. Now, let me show you IWM. See this rectangle I drew, which was set back in 2021? So for most of 2021, this sector has been moving sideways, the small caps, the Russell 2000. So this includes XBI as well as other small companies. So the other side of it is regional banks. Regional banks have been holding things back as well, not only XBI. XBI has already been dropping. So the biotech, little pharmaceutical companies have already been dropping since February. The regional banks haven't gone anywhere, trying to hold this index up before it started crashing because interest rates were being raised by the Fed. So at that point, it just fell back to this level, which is set back in 2018 and then again in 2020, just before COVID. Tested multiple times. You make this huge base. Guess what? That's a huge ass base. The larger the base, the higher the space. And we just broken out after waiting how many dang years? 3 years? So get ready, guys. You're going to see a bubble. Bubble, bubble, bubble is coming. So if you want to make your money, it's like, you know that game where they put you in a booth and they start like the wind machine with all the dollars flying around you? That's basically what a bubble is. You're just running around trying to grab as many dollars that the government is printing, because that's the effect. They injecting liquidity. All you're doing is trying to grab as many dollars as you can, right? As the wind is blowing. So that you can use that analogy the same way. So all this stuff, why stocks move up and down, is just all about liquidity. Now let's look at gold. So gold miners dropped right here. So you got up to that resistance, you dropped, you fell back. Now we're right back on the rising weekly 18. We have a rising weekly 40. It's about time to re-enter gold stocks. We have gold, one more big gold earning, which is tomorrow, I believe, in the morning. GOLD, gold, Barrick Gold, one of the largest ones. So this one will report. I believe so. Oh, man, why does it always default to that one? Yeah, Barrick Gold, this one. Make sure you get the right tickers, because there's a lot of tickers that are the same. So if you're on TradingView, they'll just default to this one. Go to Barrick Gold, okay? So this is the company. So this will be interesting tomorrow, right? Tomorrow morning, yep. Tomorrow morning, we'll see how it goes. GOLD is the ticker. And so EXK today on the Trump victory dropped like 5% about, I think. And it's recovered all of it. So it's back up here, kind of like Mexico. You see that? So it's a knee-jerk reaction. You get a knee-jerk reaction from the dollar rising, the rates rising, and it recovers. Now, as far as the bonds are concerned, it's still at the bottom. So the rates are still high. So it hasn't recovered yet. But let's look at the chart. So I already started buying TMF around below 50, right? So I'm looking to add to it in the coming days. So around Powell and after Powell, I'll see what he says and see if I add to this position, because I want my dividends, I want my dividends, because TMF will give you a dividend too. So they'll give me my dividend at the end of the year. So just before New Year's. So I want my little 3 point whatever percent for holding this trash. But not only that, because I want to get the price movement. So owning a bond is not only about getting that interest rate coupon, it's also about the price. So if the yields fall back, let's say the GOP doesn't have a majority in the House, you might see a snapback from this exaggerated move. This move is pretty exaggerated. So I could see like a 20% or maybe more into next year if you keep holding it, 36%. So if you want to get paid an interest still, but you also want that extra price movement, yes, TMF is one way to do it. If you're not that risky, then yeah, you should just get TLT. They pay every quarter. You get paid every quarter. I mean, every month. My bad. Every month. TMF will pay every quarter. And TMF has the 3x advantage. But also, yeah, if it goes down, you get hit. Like today, I'm going to be down on this position by 10%, right? Yeah, this should be, almost 10%. So if you started buying like me here, so it dropped below 50 here, right? And I start buying 47, 46, 47 bit by bit, or 45. I guess I bought a little bit here. Anyway, yeah, you got to take your chances, because there's going to be one more knee-jerk reaction if Trump wins. If Kamala had won, then what would happen is the stocks would pull back and the bonds would have went up. That's why I told false yesterday. That was what the other scenario would have been. The bond market was wrong. It has to revert back up to here, right? TLT would go back to 96. It'll be a big steep thing. You'll see a lot of stocks drop because of that. But I think Bitcoin would still go up. So Bitcoin was probably one of those bets where it would have worked either way. It works better with Trump, but either way, it would have worked. So, and Palantir would have been another one. Palantir, it doesn't matter which party wins. Palantir is one of those things where exactly you just go bam. I don't give a crap. I'll just win. So it's up. Palantir PLTR is up another 5% today. So very nice. I would probably think about selling in the coming days. If you don't care about taxes, if you have long-term tax holdings because you bought this before 2024, if you bought around here, let's say $15 a share, October 2023, this is already, you can sell and just get long-term tax treatment for capital gains. You'll be fine. Otherwise, keep holding if you want to go through Powell and the Thanksgiving, but I think you're okay. But I would suggest, if anybody's waiting to get in and they miss their chances, you're going to have to see if it returns back to 45. See if that happens. You might not get lucky, because if the bubble starts too quickly, then you might not get lucky. So let me see what else. Oh, Zim. Okay, Zim. Okay, this is a stock. So it dropped in the morning on a knee-jerk reaction. Again, this thing is dependent on container shipping between China and the US. That's the main bread and butter of this company. So anything with tariffs probably will shake this thing up and down. But I like the way the chart has been setting up since May, and it did this last move here in October after the strike. So I got a bunch. I bought some here just in case this was a real breakout. It wasn't, right? So the longshoreman didn't strike. It just ended too quickly, so I couldn't take advantage of any quick pop. So then, all right, goes back to here, goes back to where it should be, to the moving average, to this level, at 19. You buy here, you move back up. You're gonna shake and bake a bit. You're gonna have a lot of congestion between 23 and 24, 23 and 24, or 25 before you do the final move. So if it happens, I'm still targeting 45 to 55 dollars a share. Yes, Mara is up. Yes, that is the thing. Oh, anybody that still hasn't gotten into Mara, do not get now. Wait until Powell. Wait for this because there's plenty of times. Okay, so you guys don't need to get it. Like I said, you guys don't need to get the exact bottoms and tops. Okay, I got some here. I sold a bunch here. All right, I'm just gonna be chilling. When everything is aligned, everything will be aligned. So we see the seeds. You see the XBI. We see the IWM. Now we got the QQQ, the NASDAQ. You see that? It hits right at the top, July. It goes right there and it stops. You think that's coincidence? No. Look at the chart. Look at where it possibly can go. This is the weekly, right? I go down to the daily. You see, you have a rising 18. You got a rising 40. Even you had this huge drop on Halloween. It still hit that 40 just below this 486 area, and then it keeps on fighting next to it. It keeps on fighting. We recover before elections right to that rising 18 next to the yellow line set by, or orange tangerine colored line next to that gap. Then when you win the elections, you pop to the next level, right back to where it's supposed to be. July. Now we are there. Okay. Everything is lining up. All the ducks are in order. The odds are in our favor, but you still got to wait for the event. The event is tomorrow. Powell will speak. He will speak 11 o'clock my time. Okay. That's 2 o'clock Eastern. Actually, no, the press release is 2 o'clock Eastern. It'll be 2:30 when he starts yapping, but the algorithms will start moving at 2 o'clock. So watch that time. Keep that on your calendar always. So if you're doing any kind of investing or trading, you should at least watch the major events. Any type of earnings that you feel is important. In this era, we're looking at the big 7 earnings, the big 7 companies that are driving the S&P 500. Most of them have completed last week. That's why we don't care about it. Now we're caring about elections. Now we're caring about Powell. After we're done with Powell, then we care about NVIDIA, the last Mag 7 stock. Okay, NVIDIA reports on the 20th. That's all you need to know. And after that, we're smooth sailing into Christmas. That's it. That's all we're waiting for. Well, not exactly smooth sailing. Any news could happen with, like, SMCI. We still got to worry about that. See if it's a fraud or not. That might cause issues because they might get booted off the S&P 500. So right now we're still not doing anything for most of the day. Nothing going on there. So you still have time if you want to gamble, get in around 21 bucks, make a little trade here and there. So that's fine if you want. So I don't see anything major changing in that arena. So let me check if anything else is moving. No. Okay, everything else is good. TLT, TMF, no, I'm gonna wait a while before I decide if I want to add to that. It's no big deal. I'll just leave it alone because I want to see if it gets flushed out again just before Powell. Because I believe there is an auction. There is a 30-year auction in about an hour. So let me wait for that at least, right? Let's see what happens. How many people buy those 30-year bonds at auction and see how the price moves there. So if there's going to be anything happening with the QQQ today, everybody's just waiting on those 30-year auctions. So that might change the complexion of the market. And looking at gold, right? See gold. Yep. Let's hold that. Yeah. Okay. I mean, that's not bad. That gold miners, drop this much. Usually if gold drops nearly 3%, you would see people flipping out and running away from gold miners. I would have thought it could drop here for GDX below 60, 36 even, maybe here. You know, as if it's holding this range, then yeah, it's not bad. Yeah, it's not bad at all. I mean, at least it's keeping this channel mostly. Okay. But it's going to go sideways. This much damage means it's going to go sideways. Okay, guys? So there's no rush to get back into it. But if you got EXK today, this morning, not bad. You got a nice deal. But be aware that it's not going to be easy just to shoot back up. We're probably going to be struggling going sideways for EXK. So if you got back in this thing at this price, not bad, not bad, not bad, not bad. All righty. Okay, let's see what else. What other tickers to look at? I had a whole bunch of earnings tickers I got to go through. I think. Oh man! Oh man! Oh man! ARM and Qualcomm. Yeah, ARM and Qualcomm. So earnings after the close, ARM and Qualcomm. So ARM and Qualcomm's QCOM. Watch that. That will affect the semiconductors. So I think we had some bad news, mostly from smaller companies. So and Samsung plus Samsung. So Samsung plus a bunch of smaller semiconductor companies that are more dependent on non-AI business and still in cell phones. Then yeah, Qualcomm is heavy in cell phones. So yes, that might hurt. So if you're in SOX L and trading that still like here, yeah, I would be cautious for the short term before Powell speaks tomorrow, because you might have a dip before another attempted rip, because yeah, the whole chart is messed up. Because you see this, like the 18's rolling over, you're under the 40. Nah, this thing is like SMH is better. SMH is another ETF for semiconductors, but it's constructed differently. It has more weight, I think, on different sectors. So SOX is more towards the Philadelphia index. So I guess it has more Intel or something like that. That's why it's kind of weaker. Yeah, well, SMH is more Nvidia or something like that. I forgot the real reason. Yeah. Let's look at Avago. Avago, that's my favorite one. Yeah, I like this one. This one's really strong. I like that. Long term. So yeah, I told my friend who was asking for his brother what stock he should get, and I was like, Avago. This was way back here. So let's say he didn't sell up here. I said, so I mentioned this in the other stream. It drops back here just before the market turns in October 2022. It's now up 300%. Not bad for a nice moving slow stock. Yeah, it looks like it's about to break. I said that's very good. Avago is a really well-run company. Yeah, I gotta admit. So if you're looking for a blue chip type stock to hold long term, yeah, Avago is probably one of them that you should be paying attention to. But I wouldn't be buying at that price, honestly. So Nvidia, same issue. We're at the top. We gotta wait to see how it is. Pelosi capped Avago. Well, I probably was better than Pelosi. I probably told that dude way before Pelosi got that one. Anyway, because yeah, you just look at the chart. Oh, didn't it have earnings today? Celsius Holdings. Okay, CELH. So this bubble has been busted. I'm watching it. Yeah, maybe, but I think the damage is too severe. What's gonna happen is this is gonna have to go sideways before it tries anything. So if the next coming months we're gonna see a lot of bubble stuff, it's probably not gonna be in this stock. Like I'd rather just get Mara and HIMS and try to look for other trashy biotech stocks, you know? Like look at Kathy Wood's ETF. Look at anything in there. Look at space. How about space, right? You can look at space stocks like Rocket Labs, RKLB. Like, look for trash like that. Anything that used to be a SPAC. You see this? This is a SPAC. So I'm still gotta do this for you guys. I have to go through and find the stocks that used to be SPACs back in the 2021 era. So if this thing is really going to be a movement, reinvention of the wheel where we get back into the bubble land, you see this? $3 to $12, and it's just starting. It's just starting. When is this earnings? So Rocket Lab, RKLB earnings Tuesday the 12th, next week. So yeah, you want trash like this. Don't go to Celsius. Go look for the ones that are leading. So let's say it pulls back to here to $10 again into December, right? And this thing moves up. Let's say earnings is bad, or like earnings is good but not good enough. When you have a high flyer like this, that means your earnings better show a lot of growth, because these companies don't have any profit, right? These companies are just a bubble. They're just all about bubbles. So you want something that is more appropriate. So let's see what Powell says. Let's see what it does to this type of stock. Let's see how earnings goes. Then yeah, add this to the list. Add this to the list. So the reason I don't like Riot is look at what it did last earnings. Riot is trash. Usually, every time it has earnings, it performs worse than Mara. So Mara will have earnings next week. So this was earnings. So I don't like to play stocks that are affected too much by earnings, like crypto stocks, especially because crypto stocks should only be affected by crypto itself. So Bitcoin, because Ethereum, you can't mine it anymore. So Riot and Mara are the top two. So I'd rather choose Mara than Riot, because Mara behaves better during earnings. So I'll choose, because they both move about the same. And then the second thing is I picked CLSK. CLSK is because CLSK actually is a better run business. So sometimes when it has earnings like here, you see that? So earnings results here, it jumped up 68%. Because CLSK, even though whether you believe Bitcoin miners can be a solid business long term, at least CLSK tries to show that they're not burning money. Okay, so if you're gonna show growth, you better not be burning money while you're doing it. So Riot has this tendency just to burn money. Mara kind of does too, but at least Mara is a little bit better at presenting itself than Riot. So that's why I like Riot over Mara. Otherwise, Riot and Mara are essentially the same. Like, if you're telling me, like, okay, which chart is better? Just looking at the chart, you see Riot has more of this like downward sloping feel, and you look at Mara. I mean, Riot and Mara, look, it's going sideways. So there is a bias, right, towards Mara rather than Riot. That's about it. And we can just look at through all the charts of everyone, because I could say like Wolf is better than either of them. Look at Wolf. So this is Gwyneth Paltrow's Bitcoin choice. Look at this. This is upward sloping, has a better looking chart, up 22%. So why do I buy Riot or Mara? I could just buy Wolf. Just on a chart basis. So just from looking at a chart basis, right? I could also look at Bitfarm, BITF. See, this is more sideways. I could look at BTBT, sideways. So I could go through all of them very quickly. I'm not going to waste my time looking at financial statements and whatever. I'm just going to look at the chart, and just based on the chart, I'll pick which one I like better. That's it. That's all you should do. All you got to do. That's really all you got to do. Very quick. Okay. Oh, I see. I just remember briefly you mentioned Celsius yesterday. I like their mango green tea. Yeah, because Celsius used to be one of the stocks I used to play. I'll keep looking at it. It's kind of like Carvana. I'm not in it anymore, but I like looking at it because these are examples of charts that I like. They really show you, what's possible in the stock market without doing options or anything like that. You can just look at it and say, oh, I see. And even if you're not in it, you can learn from them. So a lot of times this is just homework for me. I'm just looking at for just to study it, understand it. Actually, I like using the Bitcoin chart because the Bitcoin chart is so volatile, and the Bitcoin goes to so many different cycles so quickly. You can see multiple cycles within cycles in Bitcoin, a lot more than normal stocks, right? Because it's like a compressed timeline. Like you could probably see 20 years worth of stock information inside 4 years of Bitcoin, because Bitcoin is just an exaggerated human emotion machine, right? In a way. So if you look over long periods of time in the stock market, because back in the day, people were a lot slower when they did cycles, because like things change in a particular way. You have presidents elected 4 years in the US. You have, boom and bust cycles every 7-10 years, maybe 20 years or 60 years. But when you look at Bitcoin, it's like really, it's like an experiment being done on people. So this is really and it's grafted on the technology. So everything moves in a quicker pace. So if you study a lot of Bitcoin charts where you just look at the monthly, the daily, the weekly, you can kind of you learn a lot of it, and then take that into the stock market world where you're looking at a slower pace, where you look at the daily, weekly, monthly, quarterly, and yearly, and every 7 years or 4 years, however you want to do it. And that way, a lot of it's just practice. The more charts to look at, the better you get at this game. Yeah, so that's all it is. It's just a pattern recognition. You're just training yourself. So let's see what other ones we got. I think I got one last video to play since I was talking about crypto. Play this last one here. Right here. I gotta find my video. Play this. Yeah, this guy, the CEO, is always comes around to pump Bitcoin.
They are surging right now. This after Donald Trump's electoral victory. You're looking at Bitcoin at $73,000, almost $74,000 this morning. At one point, it was, I think, even marginally higher. Want to bring in Galaxy founder and CEO Mike Novogratz. Mike, I believe that you were supporting the other candidate, but I'm curious, as you see these markets moving the way they are, what your reaction is.
Listen, it was a great night for the crypto industry, right? And if you listen to your last guest, Donald Trump, that keeps his promises. If you go back to the speech he made at Nashville to the crypto community, his agenda is very pro-crypto. J.D. Vance is pro-crypto, Peter Thiel, Howard Lutnick, Kennedy. He surrounded himself by people that believe in the industry, care about the industry. I mean, the crypto community showed up, right? There are now over 240 congressmen who, the crypto PAC thought were pro-crypto. And so we've got a Congress that is moving our way. We've got a president that's moving our way. And so for Galaxy, for the crypto industry, I couldn't be more optimistic.
And in terms of your optimism, it relates to the way this is going to be regulated, because now you have a bet going that there will be a Bitcoin reserve for the country. I mean, sort of
listen, I'm not sure
play out the permutations here.
I think the biggest thing is the OCC, the FDIC, the SEC, the regulatory chairs getting direction from a president and a secretary of treasury that says, hey, we want to lead in this industry. Those three positions with someone who's open-minded to crypto and who's pro-crypto changes everything. Allowing State Street and Bank of New York to custody crypto, allowing the banks to hold it on their balance sheet, will bring in billions, hundreds of billions of participants into our ecosystem. And all of a sudden, we'll start seeing decentralized systems launched and work. And so this is really a step change shift. Now, it's not going to happen overnight, right? You don't get a new SEC chair in a week. But over the next 1, 2, 3, 6 months, as these new people are put in these positions, I think you're going to see a substantial shift in the energy of this industry.
Mike, to the extent you want to throw out some names, who do you think might be up for this SEC role? I know we've had a lot of names thrown around for the Treasury Secretary role. We just talked to Scott Bessent, and we had John Paulson on the program earlier this week. Those are two names that have been floated for that role. We also have had Jay Clayton and others. Who do you think would be the right person to run the SEC under a second Trump administration?
Listen, Hester Pierce has been there, and they call her crypto mom. And I know she's probably throwing her name in the hat. The chief legal officer at Robinhood has been thrown in. I'm not sure the exact person matters as long as they're very open-minded to this industry. And I think there's just no way Trump's not going to pick someone who, listen,
Right.
He's launched his own coin. And so, his family is engaged, he's engaged. And so I just think it's hard to you got to wake up and slap yourself in the face. We have gone 4 years of a very, very difficult regulatory environment, and that's all about to change.
Right. Hey, Mike, can you put your macro hat on for a moment this morning? I'm curious if you were investing more broadly outside of the crypto space, where you think the winners and losers are?
Yeah, listen, I think in the short run, right, emerging market currencies, China are getting hit. You're seeing it today. I'd probably be a buyer of Chinese stocks on any dip because I think the Chinese are going to respond with a big stimulus.
Oh, whoa. This guy's saying the same stuff I am? Oh, man.
Stimulus package. I like the yield curve getting steeper. There's one, I guess, wild hair out there, right? Elon Musk was really the only person on either side during the campaign that talked about America going bankrupt, that talked about this giant deficit that we have that we need to do something about. If that's the case, if they actually take him seriously and do something, and Bessent alluded to it, that would change things, right? That would change things in yield curve. It would change things in gold and silver. I don't think it will happen. I don't think Donald Trump has it in him after having just got this mandate to say, oh, I've got to tighten my belt. I just don't see it. I don't see us, Social Security and Medicare really are the two things you'd have to go out and attack, really unpopular politically. And so one of the reasons
so how much progress, therefore, do you think that Elon Musk can make then?
Very little. Again, 57%.
He doesn't do little. Mike, have you not watched Elon Musk? He's landing rockets between chopsticks. He doesn't do little.
Listen, it will be interesting, but you've got to let's see what the House comes at. I think the Republicans will win the House, but it's going to be very close. And so you're not going to have a giant majority in the House. You don't have 60 in the Senate. And guess who gets to decide who gets to spend money? Right? Congress, not the president. And so it's always easy to get euphoric about, oh, this is all going to happen. Listen, Social Security, Medicare, and Treasury financing is 57% of the budget. Add the military on, and you're at like 75%. And so you got 25% to play with. It's hard to cut a lot out, right? We have a $6.75 trillion budget. 25% of that, like, for Elon Musk to cut $2 trillion out of the budget, you'd have to cut 100% of non-Medicare, Social Security, and debt service and military. And so I'm hoping he makes progress. Trust me, if Harrison won, the first tweet I was going to send was, please hire Elon Musk to help on, efficiency in the government. I really think it's an amazingly good idea, and I'm hoping he makes progress. I just think it's a lot harder than you think.
Right. For those folks out there thinking about equities this morning, especially S&P 500, obviously, which is weighted almost entirely or so much towards the big tech names. Do you buy? I mean, clearly the market is suggesting that, but I ask because this is something you do for a living.
Yeah, listen, there's a ton of buybacks coming in the next few, 5-6 weeks. And so the supply demand tells you to buy equities. There's momentum on its side. We're about to take out, the recent high in NASDAQ. And so I think there's one last surge in equity prices. The risk, of course, is if the bond market doesn't like this, right? If bonds are down 2 points, if they fall another 3, 4, 5 points, at one point equities are going to say, hey, what's going on? But right now it feels like equities higher, bonds lower.
All righty. Yeah, we got that. So let's see. GSAT. Yeah, I heard of that one. I heard of that one. Let's see. So I've been looking at ASTS. That's another SPAC stock. Yeah, it started at $10. It was a SPAC. You know, Rashu could have got it at below $4 or whatever, and with insider knowledge. So yeah, I've been waiting for this thing to build its momentum back up. So it's building energy. So ASTS, AST Space Mobile. So you can look at that, including Rocket Labs, RKLB. Remember that. GSAT. Let's see how it's looking right now. I think it's been in a range, right? Yeah, it's been in a range. It's been in a tight range since 2021. It's kind of following that IWM type pattern here. See? Where it's just stuck in a range. Yeah. So could be. It might be ready to break out with the rest of them. Let's see. It used to have a high of $4. Okay. Oh, well, it started at $16, 2006. Not sure if it's going to get there, but one can dream. So I don't know. I can't tell you about valuations. I don't know what valuations are. I just look at charts. I just look at patterns. I say, like, well, it's worth the risk or not. If the chart looks right, if the chart looks ready, you know, you build a range like this, that's around 3 years. It has to do something. Either it's going to go down a lot or go up a lot, right? So yeah, we could look at price targets. Let's say this area was based on 2009 to 2010. All right, you see that? So based off of that, it's respecting it. So if it actually finally breaks out and doesn't do this move here, where in 2014, I wonder why it popped in 2013 to 2014. If there was any real hype, there's definitely something going on here. September 2013, there must have been some news. Some other news made it crash back to that green line. You see that? Whatever news it was, it respected that green line again, tried to recover, but it's too late because you see the moving averages are rolling over. Once you see that, it's done. This is weekly. Now, if we look at the monthly, let's see how it looks. Yeah, let's see. I mean, at least the moving averages are trying to kiss each other right now. This could be it. Could be. And you see the monthly right here. You look at the volume. Look at that. So the month's not even over. We're just 1 week into November, and look at that. The volume is quite high, right? Compared to last time we had this kind of volume was September 2022 when you had this red bar, because you had a movement where it tried to go to 3 and crash right back down to 1.5, essentially $1.60. So that's pretty significant. So somebody knows something. I don't know if there's any news. Looks like it hasn't had earnings yet. That's tomorrow after the close. I don't know. If you want to risk it before earnings, like if you got it at $1, yeah, definitely that would have been. Now that it's back to this green line, that's tough, man. It could just pull back. Shoot. Yeah. See, it's all about risk and reward. I'm not going to tell you I have no insider information. I can't tell you what they're going to say. And even if I knew what they were going to say, I have no idea how the market is positioned for it, right? The market might be like, oh, well, you know, it wasn't good enough. I'm not going to reward you and just punish it and take it back down to $1. Who knows? That's why earnings is such a gamble. It's like, how are people positioned? Not only what the news is, where is the price going into the earnings? Like if it stayed at $1 before it released earnings, it's easier to like go back to this. Now that you're at this green line, which is determined to be quite important. Yeah, I probably can't say anything about it. But I do see the volume. That could be bullish. That could be. So, okay, tropes. I'm going to watch this. I'm going to watch this one. All right. I'll add it to my list. I'm going to be watching this one. GSAT. Okay, okie dokie. So let's see what other earnings we have here. VST is tomorrow. Yes, CELH. We looked at that already. You see that? So no go. This is a no go for now. We got to wait a while if we want to see what happens. There are better opportunities elsewhere. So Celsius Holdings, energy drinks, no. CVS popped today. CVS. It's been doing this bottom ranging type stuff here. Bottom. I don't know, man. I don't know if this is an opportunity or not. It could be, might be, but I kind of hate that kind of like pharmacy stock, brick and mortar pharmacy, and yeah, I don't like it. We got Teva. I think I forgot if Martin Scully wanted to short this stock or not. Okay, it's down 6%. Okay, it's ran up here. Not a huge crash for earnings. Not sure. I believe Teva does all those hormone treatments for the transsexual community. So it's based in Israel, I think. I'm not implying anything by that. Anyway, ARM. Yeah, we talked about ARM. We talked about AMC. We talked about Qualcomm, SMCI. We talked about Novo Nordisk. We talked about, okay, so NVO, Novo Nordisk. We already discussed it. It's down. HIMS, which should benefit from. So I think that chart looks pretty bad right now. So I would rather wait on HIMS because it's getting benefit from Novo Nordisk moving down alongside Eli Lilly, LLY. So LLY and Novo Nordisk, these are nice long-term stocks. But like I said, the way it's looking right now is you can get in at a later date. This is not the time to jump back in. Yeah, Mobileye. Mobileye was a spin-off of Intel because Intel bought Mobileye and they spun it back out. Yeah, I know Mobileye. Yeah, this chart looks terrible. I have no idea. The problem with Mobileye is because they didn't have any customer relationship with Tesla. Tesla did not like LiDAR. So you can look up LiDAR type technology stocks, and they were affected by whatever Elon said. I don't know. Elon might have said something to backtrack that, but it's too late. You see, so anything Elon says shakes other stocks too. So because the most electric vehicles right now with autonomous driving is all in Tesla. So anything Elon says will shake it up. So yeah, okay. I don't know. I have no idea if this is the right time to get in because there's not much chart history too. Like it used to be I don't know if it used to be a stock, but they got bought out by Intel and they got spun back out. And we don't have much of a history before 2021 when it was a bubble market. So it could be because it's trying to make a bottom. You see these two monthly candles. It looks like it tried to make a bottom. If I zoom into the weekly, yeah, it looks like a bottom is trying to be formed. It already had earnings. Looks like good results. So I'll watch it. I'll put that on the list too. Don't know. I'll see if it's worth getting into compared to Mara or something else. Well, being spat out by Intel doesn't mean much. Intel is just a clusterfuck. All right, it has poor management. It doesn't know what it's doing. It bought out Altera, and I think it spun Altera back out as a subsidiary. It's not fully spun out like Mobileye, but yeah, it's a subsidiary. It's just poor bad business decisions. All right, so I don't know whether Mobileye is good or not on its own, just based on what Intel did to it. But I will say that, yeah, Elon talked crap about it because Elon's like, no, LiDAR is trash. We don't do LiDAR. We can find other ways to do sensors for autonomous driving, blah, blah, blah. I don't know. That's not really my field of research. Like, as you can see, like, right, it takes a lot of work just to keep track of every sector and industry. I think as you know, I'm a chart guy. It's a lot faster just looking at a chart than understanding the in and outs of things. Because let's say I didn't know any of that. I just look at the chart. I'll go like, let's see what I see. Monthly candles. I see a wick here, wick here. It's trying to form a bottom. Go to weekly. I see a bottom. Good earnings result reaction here, high volume. You hit the 18. It's descending. So I'm guessing it's going to go sideways, blah, 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 until next earnings, January. When the 18 flattens out, the 40 flattens out, 18 will try to curve into another 2 quarters, because you have to remember, stocks will only move between quarters. So it takes a quarter to do something else. It takes another quarter to do something else. So by April, it's probably going to finish its bottom, probably rocket. But like I said, that's probably too late, right? I don't know. Because let's see, what's the market cap of Mobileye here? Market cap is 12.77 billion. It's not a small company. So if you want like stocks that pump and dump real quickly, you need to be small. This doesn't fit that characteristic. It's probably going to take a long while to form a bottom before returning, unless it has a surprise earning result in January, which will make it rapidly try to retake $23 a share. So again, this is all strategy. Yeah, so strategy. So the news is already out. Yeah, the news is already out. I mean, this is why Tesla went down during the robo event. You have to remember, right? Tesla here crashed 3 weeks ago on that robo event because they were like, oh, that's boring, nothing new. Because if you look at Uber at the same time, Uber also had earnings recently. See, Uber popped because they were like, well, okay, they're not going to compete. And Lyft, right? I think they popped around the same time too. Yeah, here they popped here. So yeah, so I think a lot of people already expect Uber and Lyft, because I don't know why it was such a big deal that Uber and Lyft were worried about Tesla coming into their game. It's just like, come on, bro. It's going to take a while before like Tesla even gets to that point. And they're already worried about it. Really silly. So that kind of overreaction kind of tells me that, yeah, these guys probably are already thinking about competing, because we have Waymo, right? Which is part of Google, I believe. I believe Waymo is a leader in this. I think it's Google, right? Yeah, okay. Waymo LLC, formerly known as the Google self-driving car project. Yeah, Waymo. Waymo's ahead on this stuff. And there's another one. Cruise, right? Cruise got killed though, because Cruise ran over too many homeless people. So yeah, they ran over a homeless guy in San Francisco. That was the death of Cruise. So Cruise is dead. What was the other one? Shoot, wasn't there another one? I don't remember. There was another big one. I just know Waymo is top. Probably another. Okay, I'll just walk around San Francisco one day, and I'll just keep track of all the car companies that I see, and I'll get back to you. But yeah, that's how you know which one are the top ones. But yes, Google is on top right now. So if you look at Uber's chart, not bad, not bad. Since we're already here, if you look at Lyft comparatively, yeah, it's trying to form a base. This is gonna take a while. Yeah, Lyft is gonna take a while. Whatever. This is a weekly chart. Look at it. This is gonna take a while. So let's look at Tesla right now, since we got the elections over with. It's back at the top of its range. Not bad, not bad. So definitely something to eye here. So I was saying this been making a base since 2021. You got 3 years. If you look at the Chinese counterpart, BYDDY or BYDDF, either one, yeah, similar looking chart. If Tesla gets into China in a significant way and we got the stimulus going, yeah, both these stocks can fly. So you guys have to remind me. I need to do a price projection on this with the point and figure chart. So both these stocks, I got to tell you what price they could potentially go up to, okay, if once they complete their breakouts. So this one, you'll still need to wait for China. So maybe Chinese New Year's, BYDDY, and then Tesla, we can see what happens in December. Okay, so let's see what happens during the Santa Claus rally phase of things. So see if this flies. But again, you can get better performance in other stocks that are smaller. Okay, so let's look at Mexican cement, CX. So I was talking about Mexico. Now back to this blue line. See? Okay. So if Mexico is getting a little punished today, it has this nice wick. We're still here, yeah. So I can look at something like CX as a really good trade from $5 all the way, because if we're doing a lot of infrastructure stuff coming into the and home building, because that reminds me, look at home builder stocks. So because the interest rates have flown up for 30 years, we are still going to struggle. Like I said, we're going sideways. This isn't going to be a bounce and rip, okay, like here. Okay, we got a lot of work to do because this didn't completely come down, and interest rates are still high. They're going to stay high. And that reminds me also to present to you, so that ETF was ITB, okay, and I'll get back to that, but let me show you interest rate stuff. Where is it? Come on. Righty, here we are. Okay, here it is. All right, I gotta zoom in though, so we can see it. Blah, 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 except cookies. Oh, I'm not gonna play any videos. I might as well turn on some background music. Some soft background music from StreamYards. So we're gonna get one cut for the next 25 basis point cut for tomorrow. That's 99.4% now probability. We'll get another cut, 67.6% probability in the next meeting in December before Christmas. And then we're going to hold it in the January meeting, January 29th. And then March, we'll get one cut, 25 basis point cut in the spring. So 319. And we're going to hold it into the summer. And then we'll get one cut in July. So right now, we're not having a steady drop like we were before the elections results came in. So we're going to hold steady at 3.75. I mean, a 0.375 and 0.4. I mean, oh my God, 3.75. I was right. 3.75 and 4.00. That is the interest rate for most of next year, second half of next year. That's what we're looking towards. So you can look at your CDs and your T-bills and whatever and see what the banks are going to offer you guys, but you're not going to get above 4 by the late summer. And if we get a nice bounce in the first quarter and hold it through tax day, April, then the second half will be pretty nice because you'll see a lot of people looking at their bank statements, looking at their little holdings and T-bills and CDs and going like, hey, man, look at all these stocks going crazy. How come I'm in this boring 4.5% CD or T-bill, right? That greed is going to kick in, and then the bubble keeps inflating into next December. So we got 1 year of bubbling. So that's what I'm expecting. So anybody that's telling you there's going to be a crash, I'm sorry. You're not going to time it right. It's got to bubble a lot more before it crashes. So we got time, baby. We got at least 1 year. If we're lucky, we get 2 years. And you'll see housing prices go fly high, right? If the interest rates start dropping in 2026 and you see a lot of people bidding up housing prices, woo, that's the signal. That's the signal I'm watching. Yeah, so 2026, probably the time I'm looking at. But for now, let's look at home builders. Let's look at the home builder stocks. So ITB is the ETF. You can also look at the XHB. XHB is another home building stock. It's similar. There's pretty much no difference. And if you want to get the juice, you want to do the 3X ETF, you can get NAIL. NAIL, NAIL, home builder and supplies. Okay, 3X ETF. So if you get it at the right price, you know, I would be waiting for when ITB gets back to 112. So wait for ITB get back to 112, and then I'll start looking at NAIL. Maybe when NAIL gets closer to 110, okay, from this current price of 130. Yeah. So if you're using 3X ETFs, I don't know how the options market looks for ITB, but you can look at ITB and XHB. So if you're playing options, look at both of them, see which one has a better liquidity for your options. All right. Otherwise, you got to play individual stocks. So I don't know how those will play out. Let's see what other ones to look at. I looked at that one. Oh, Coherent. Coherent will report earnings. COHR. It will report earnings after the close. So I'm pretty curious about if it holds this line. This is one of the big optical fiber companies, interconnect companies. So whatever they say about how data center spending is really important. I got to see that Facebook, Amazon, Google, what other ones? I think those are the top 3 spenders. You got Apple alongside them, but yeah, and the other ones are AAOI. Man, my computer's slowing down. Oh God, StreamYard's killing me. Okay, which one's this one? Thursday after the close. I'm watching this one too. It moves pretty well, but like I said, this is a trashy company. I mentioned this before. The CEO is not good. The management is not good. I mean, I wouldn't trust this thing, but if you want to trade it, you think there's a real huge expansion in optical fiber, yes, then by all means, you can risk it for a AAOI type company. ACB, Aurora Cannabis, reported earnings. And I think if the Republicans win most of the Congress because they won the Senate, yeah, it's harder to see any change in legislation. But of course, like I said, Trump isn't against marijuana. That's what he was going for. But you're still dependent on Congress. So a lot of those local congressmen are probably wary of doing too much on the marijuana front. So that trade is gone. So we're going to look at the crypto stocks now. Let's look at each of them before my memory runs out. So CleanSpark, CLSK. Looking at the weekly, 18's moving down. So we got to go sideways for a bit. Maybe. Okay, so this will take a while before we get back to $16 a share. Right now it's $12.50 about. Mara, so this is the weekly chart here. Same thing. We got a downward sloping. Has a lot more sideways motion than CLSK. CLSK is quite violent. So we got earnings next week, Tuesday on the 12th. It's at 18.85 cents, back to this top red line here, set in July 23rd and again in August 22nd. This will be important to break until we get to $30 a share. And it's a high volume, so you're going to have a lot of options on it. So if you want to play options, go ahead, go gamble, but you better time it right. So we'll see how it happens on Jerome Powell Day, Thursday. Remember that. Wolf, Gwyneth Paltrow. That's her favorite mining stock. You see that? Perfect. You have this more rising action here. I like that. I like that. Now you're above this level. $5.96, so about $6. Perfect, perfect, perfect. This is right on the cusp of moving to the next high, but it's quite dangerous. It used to be hang out at 65 cents about 1 year ago. Yeah, it's about 2 years ago, actually. Yeah, 2 years ago. Okay. So, but you know what that means. It could probably fly pretty high too. But yeah, watch out. It's got earnings. I don't know. November 12th. So be careful. Bitfarm. Earnings Tuesday, November 12th in the morning. So there's going to be a lot of crypto earnings next week. So yeah, be careful if you get it at this point. Know when to get your scalp in and get out and then re-enter later. That's my advice. This has a more flat motion, not very exciting. Yeah, you can see here. If I put it here, yeah, it's stuck. This thing is stuck. It doesn't really have that same motion as Wolf. Mara, though, it's just more popular, even though it has the same motion. But if you're gonna do something like CLSK Mara versus BitF, I'd rather have Mara and CLSK. BT, same thing, sideways motion. Same issue with BitF, I think. Nothing distinguishing it. So for now, you just look at the chart and try to narrow it down. So I would say Wolf is the best looking one, although it's the most risky of all of them because it runs at a higher clip at a larger range. See, this one HUT is it has a more orderly pattern because it touches this in a respectful way. It just goes up, touch, right, at this green line around 18.5 or $18. Touch, 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 touch. You see that? So it's, I don't know if it's going to go back to 90 or 80, but it does make a clean base, though. So that's all I got to say about HUT. Maybe HUT's better than doing some of the like BT or BITF. This one, CIFR, it doesn't stand out to me. It's definitely more volatile from September to November, the way it's acting here. So, I probably would rather get Wolf then if I'm going to get that one. Yeah, I probably stick with Wolf if I'm going to do anything risky with CIFR. CIFR doesn't even have much history. It only started trading right at October 2021 when Bitcoin was already dying. So forget that. Let's see, BTDR. What the heck is this one? I don't know. This one's really new. Very ugly. Yeah, forget this one. This looks stupid. This chart looks terrible. It's volatile to extreme levels here. I wouldn't touch it. IREN. Same issue as CIFR. It's a new entry. I mean, it has an upward sloping motion that Wolf has, but I probably just rather get Wolf because Wolf is a lot stronger. You see? When you look at IREN, you're like, well, okay. Yeah, see that? It's not even respecting this high. It already failed there and it's trying to get back to it. Nah, I don't know. I'd rather stick with Wolf then. Okay, Can. This one is a downtrending one. Very easy. It's now breaking out. This might be good. Because when you see something do a change in character like this, where it's been in a downward motion and you see volume coming in, pop, pop, pop. It's trying to bottom out. This is actually a better play. And it might not be a good company, but it has more potential because the other ones are already starting their trends. They're going sideways or they're already going up. Okay. But Can, C-A-N, my bad. Canon, I don't know what the heck. I don't know why it's different from the other mining stocks. It probably doesn't do mining, but it's Bitcoin or crypto related at least. So when you just look at the chart from the chart perspective, and it's got earnings Tuesday, so look at it. Let's watch it. This one might be the new hot boy. All right, this one's the hot boy. It's ready to fly. Hive going sideways. Hive, nothing special. So ignoring that one. Riot, see, not only is it not really going sideways cleanly, it's kind of dipping down. Like I said, every time it has earnings, it makes it weaker. Like you can see that earnings results there. I don't know. I'd rather just stick with Mara and CLSK than just like over concentrated on the same thing. I'd rather have two solid crypto mining stocks. I'll do CLSK, I'll do Mara, and then I'll do some goof around in some riskier ones like Wolf or Can, and maybe I'll explore other ones, but that's about it. Now let's go look at Core Z. Core Z, interesting one. It's a lot different than the other mining stock. I believe this does some of the data center type work too with AI, so it's a little bit different. It's already had its big move in May, June, July. So it's kind of overrun. If you look at the daily, yeah, I mean, it looks good from a trend perspective. It's going to have earnings after the close, so I'll watch it. So Core Z, C-O-R-Z. MSTR, I think everybody knows Michael Saylor's company. So nothing much to say there. It did its bounce from the rising moving averages. Now, if you want to buy it, yeah, you can wait for it to pull back, but otherwise, there's nothing much there. And Coin, very nice move today. So this green candle, it's going to negate this crossover here. That's what you want to see. This is what you want to see. So if you're in it, I would expect it to pull back a bit, try to keep 220 around there, 220, because it already has earnings. So the earnings is done. Perfect. We got earnings next February. So if you think because it's probably gonna dominate most of the crypto exchanges, right? Centralized crypto exchange anyway. So that's probably good. So someone mentioned Hood in chat, so then I'll just bring up Hood. Let's check out the chart today. Yep. This is even better. Yeah, Hood is even better looking chart right there. It negates all of the earnings. Same way Coin did, but its chart is a lot better. You see it's still upward sloping. Yeah, and then we're almost back at the IPO price. So yeah, watch it. This is a big base right here. Yeah, not bad, not bad. So yeah, definitely something to watch. So if you're not in it, you might be able to look at. I think let's watch what Hood like allows you to gamble on, because since they allow you to gamble on elections, I wonder if they're going to try anything more than that. And said Trump is going to change who leads the SEC and maybe even the CFTC. These stocks, Coin and Hood, will benefit from laxer regulations. So, maybe that's something we got to look at for these stocks for it to continue up. Okay. Anything left over? Okay, I got some more. Let's look at exacts. This one, DNA, CRISPR type company, terrible earnings. Okay, I'll keep this in mind. This will affect CRISPR. Here we go. Does it have earnings already? Oh, it already had earnings? Oh, Tuesday? This one did all right. Okay. Maybe I gotta go make a stream about these CRISPR DNA companies. Yeah, maybe I gotta do that. Inno data. Let's just look at the chart. Inno data. Nope. Haven't heard of this one. Let's see. Not bad. I wonder what the market cap is, huh? Yeah, it's still small. Okay. It's got potential. Yeah, pretty volatile though. Right here in 2022 and again in 2023. Yeah, it's pretty volatile, but yeah, that's what you expect from a software company. That's why people are afraid of playing Palantir. You get burnt. The whole market. No, we don't know yet when that's going to happen, but it's being floated around. The NYSE wants it to be nearly 24 hours. Yeah. Well, I mean, that's basically like making pre-market and post-market, like just extending it out. It won't be the full market, right? But essentially you can trade shares just like you do in Robinhood, where you can do overnight trading on shares. So now it's just like everybody can have access to it. So all brokers can have access to it. So that's all it means. Bro, I don't look at any fundamentals. I just look at the results of the market reaction. I have no idea how you want to treat it. Like, was it good? Was it not? I never pay attention. I just go like, well, what's the hype? What's the story? How does the market feel? And if the market reacts the right way, then I'll just be like, all right, fine. This probably was good enough for the growth. I don't care. If there is a problem, you'll see it in the charts. People will start selling. Like you should start seeing, like, you can zoom in, right? You can go to the daily, you can go to the so let's get Bitcoin. Right? I mean, I could look at Bitcoin because it's a 24-hour market in Bitcoin. Like you can quickly see and notice patterns. Let me see. So let's look at this era right here. Okay, I was gonna save this for later, but I might as well talk a little bit about it now. Like in 2021, you had this pullback, and then you had a rise, right? A pump back up here to the old high. Now you pull back again into November, but in this case it just fell through right after. So the thing is, how could I tell if this September candle was going to end like that, or it was going to do this at a weaker November candle? It's because the 18 was higher than the 40, so that wasn't sufficient enough for me to say like, oh crap, Bitcoin is done for at that point. So that's why you gotta go down to the daily and then down to the 4-hour chart. I gotta use 4-hour chart here on Bitcoin. So if you go down to that time, that's pretty much the only way you could tell. I think it was around here, right? Yeah, it's around here. Or was it here? No, it was here. I remember this. Yeah, okay, I remember this because it looked more like this. Right? Like there's many times where it has the same repeating pattern where it just like crashes, gets stuck, can't make a new high, and then crashes again. It always does this. So it was probably, it starts here, November. And then you go down into January. You just don't, you can't really tell, right? Until you keep zooming in more and more, because this is probably what happened. So you had this dip in September and you moved down. Now there's no way for you to tell like, oh, it was going to go up again. Same thing with this. So that's where you got to pull out your MACD. Like if you pulled out your MACD, you could probably tell there was a difference between how this was actually shaping up compared to how this was before the December 2021 hit. Okay, so you can look at the divergence, right? You could say like, oh, there's some divergence. The price is moving down, but the MACD is doing something else. That's one way. You could try to get another indicator. So I'll talk about that some other time. But let's look at the 4-hour chart. So let's see, 4-hour chart. Okay, you gotta go back to that. Oh man, I gotta go pull back, go all the way. Yeah, I gotta go do screenshots of these things and put them in the slides if I'm gonna talk about it for you guys. But like I said, a lot of this stuff is you gotta train yourself and look at charts. And if you do multiple time frames, it'll be better if you can do at least around 4. So practice with 2. Try to just practice with 2 of them. So once you do 2 of them, then that's really good. Okay, that's really good. We can do 2 of them. So let's see here. All right, was it around here? October 2022. Okay, September 2022. June, yeah, around here. It's around here, right? So you make the last, some kind of minor high here, March. And then, it repeats again over and over. You kind of see it. It just fails to make any significant new high. And you just notice the patterns over and over again. Like this one right here in November 2021, before Omicron. Like the way it was moving. Like once it started moving down here, 2 red candles here, like Thanksgiving. This was around Thanksgiving. And then you see this the week after Thanksgiving. You have this return, but you see a lot of weakness here. So let's say I didn't use a MACD or anything. I'm just zooming in to the lower time frame. So this is 4 hours. And I'm just like looking at these candles. I'm just going to myself, well, once it does this, you see this last green bar, December 1st. And then you negate it with a red bar. And then all of a sudden, you just stay stuck below this range of this 2 bars, right? But you're still above like 50% of this last green candle. So maybe you would just like say, okay, you're fine. But what happens is right after that, Friday, December 3rd, 2021, big red bar here, going down, back down here. But then the next bar, you completely wipe out every gain you did here. And so at that point, you have to say, well, I'm out. Because what happens next is crazy. It just goes waterfalling right into Saturday. Crazy, crazy, crazy. Now, if I go back to this, you can look at the way this thing was moving, right? You have your drop, you recover, got another drop, you got to recover, but you have a weaker, lower highs. But at least like you're trying to hold this support level at least. So the last move up here in the green bar, you're holding steady. So if you look at the Wyckoff way, you go like, look at that. First reaction, second reaction, third reaction, fourth reaction, then fifth, and then the last reactions here, green bar, you hold this green bar, you do another extension, go back to here, and then once you move back through here, this red line, you're like, I buy. You're in. That's it. That's all it does. So a lot of times you can't tell on the higher time frames, you look at the daily, weekly, or monthly, you can't see nothing. You got to zoom down. So even I'm not interested in day trading or anything like that. I might have to go to 4 hour or 1 hour or whatever chart just to see like, hey, wait a minute, somebody here is messing around, right? You have to see if there's, and you look at the volume too. You see the big volume spikes come in here, but then when you compare it to several months later, when you look at this one, look at this. Like the way the volume is coming in here, okay, this is significant. It's holding it. Okay, you get this next high volume bar here. And then the next time you see volume is coming in November 30th. And you look at the 2 green bars with the next higher volume compared to that November. Look at it. It barely does anything. Like, it's just stuck. You're still stuck there. And by the time you get to here, you go up, but then you easily negate it. That's over, man. You have to tell yourself, like, nah. If you go up to the higher time frames, I see a downtrend. And then when you go to these lower time frames, you're looking at this. So it's like CSI. All you're doing is like CSI, right? I get my magnifying glass out and I'm trying to look for fingerprints. So I'm trying to just find with the lower time frames, use them as fingerprints, man. That's about it. So yeah. Yeah, so I haven't checked that out, the features out for the forecast stuff in TradingView. TradingView keeps adding a lot of features. I never check them out, so. But yeah, I should check. I should see. I noticed like with the option stuff you told me before, that looks pretty neat. I don't know how good it is though, since I'm not an options trader. I don't know how other people feel about it compared to like Thinkorswim, because Thinkorswim is kind of the gold standard with options. So I don't know how it competes with that. And so that's cool that they got some fundamental research tools in there. So that's nice. But all right, guys, that's about 2 hours. We try to keep it just talking about charts now. That's it. I just go through charts. I'll do probably a separate tutorial stuff. And I like the Bitcoin example. I need to do screenshots of this, because I don't like to like waste your time like going through, try to find where things are in the chart and this and that. I'm taking screenshots, and then we go through like a presentation style. So that's what I'm gonna do. Alrighty, I'll see you around. I'm gonna check if I missed anything. Yeah, not really. Maybe I'll mention them next time, because there was like 2 silver gold mining stocks, 1 AI stock. So I'll come back to them some other time. They aren't important. So all right, I'll see you guys. Have fun. Be careful tomorrow. We got 11 o'clock my time, which is 2 o'clock Eastern, for Jerome Powell to release the press release. Jerome Powell will speak at 2:30 Eastern. So we'll see a lot of activity in the algos. Check the bond market. Check every market. I'll see you guys.